Hey guys, welcome back, and today I wanted to do a quick video of this IREN trade that we took. I want us to cover the setup, the entry, the stop loss, the exit, and the risk reward of the trade. So number one, this was the setup. And what was I looking for on this trade? I was looking for a break of this trend line to the upside. So we entered into this trade right about here. Let me come back here to the daily time frame. So we got into this trade. This was on Friday, the 10th of April. Let me just come here. IREN trade idea. So we got into this on the 10th of April 26. We got into either 45 or 50 calls, whichever you are comfortable with. So we got into this right here, and you can see how accompanying volume suggested that the trade had strength. We had momentum coming in, and you can see how that pushed over for a couple of more days until we got to this 50 area. Now, why is 50 a significance? Let's come to the weekly. So when you look on the weekly time frame, you can see how these areas are important. This is one of them. You can see this area right here. You can see how these candles tried to pick a boo, but they really failed. This was another significant area. So fast forward, that's how 50 area became a point of interest for this trade. So we took off some profit right here at 50, held on to some runners to see if we were really going to go and hit this profit target here at $63 before the earnings call. Now, it was a bumpy road. So you can see how this week it was a bit shady, shocky, whatever word you want to use, but you can see what happened right here. A bit of sell-off at this 50 area, and then you can see on the following week what happened. The buyers did step back in. Look at the accompanying volume right here, because volume is what really guides you again as to what you're doing. Look at the accompanying volume right here. It pushed through this 50 area, and you can see how we pushed further up this week, leading to the earnings call. So for this trade, we did exit this trade right here, just a day before the earnings call. This was on the 6th of May. Let me find that. So closing entire IREN position. This is on 5/6/2026. So we closed this position at the high of day on this day. This was on Wednesday because the earnings call was on the 7th of May 26. Now, this position was so much up that I wasn't willing to risk all the profits I got just to go through earnings and see what turns out to be on the other side of the trade. So we exited right here, the entire position, and that was pretty much it. Now, we never got to the area, this 63, 65 area that I wanted, but I was pretty much happy that we tried. We almost got there, but because of earnings, it's not really worth it to risk if you have big profits on a trade. Now, let's come to the weekly and see here. So looking at the risk, so we've discussed the stop loss, the exit. Now let's talk about the risk reward of this trade. So this trade turned out to be a 1:7 type of trade right here. 1:7.38 type of trade right there. And if you're new here, not sure if you've watched my previous videos, I've really spoken about the essence of understanding risk reward, because the moment you really master this, you don't really have to over trade or do ABCDs and all that stuff. One good trade can really help you maintain or help you achieve your goal to become successful in trading. So that's the whole point of risk reward, and I just wanted to cover some few screenshots here that I had. This one is one of them, and you can see these were the IREN 50 calls, 18th of June 26 that I spoke about that we got into. The average price for this was $4.45 and ended up selling them at about $14.95. So this trade, as you can see right there, it turned out to be a 235.96% type of trade. Now, let me look at another screenshot if I can find it right here. So this is another screenshot, IREN, the IREN Limited, and this was a $3,287 profit type of trade. So that's the whole point, guys. Before you enter a trade, plot out what your risk to reward is going to be, because that's how you really grow in trading. If you end up having risk to reward 1:1, really it really deters you from growth, because if you enter a trade and you end up losing so much, the profits that you had been making on the 1:1 or 1:what type of trade, they're not really gonna help you cover for that loss. If you've been trading 1:1, 1:0.5 and etc, if you encounter a loss that's big, you wipe out all your profits and you don't have any profits to be playing or doing trades with. So please check out my other videos. I've done a whole lot of trade recaps, the concept of risk, reward, and hope that you find it useful. So that's pretty much it for me this evening. Thank you for watching this video, and I'll catch you on the next trade. Thank you.